A CPF officer to answer all our burning questions.
Why must it be locked? It's my money, right?
No. What if by age 55, right, the amount in their CPF is like so low, right?
Good question.
Couples that have BTO'd together, they already use their CPF to pay, right? But then they break up. Then what happens to the CPF money?
Should husbands use their MediSave for baby hospital bills?
You can also use the MediSave for procedures like...
I bet you didn't know that. So at TDK, right, we've actually covered everything under the sun. We've done love and relationships, we've done housing, healthcare, government policies, right? And there's actually one thing that ties all of these things together. It is CPF. But when we ask our colleagues, when we ask our community members, all 12,000 of you, we ask you like, hey guys, you got questions about CPF? Got a lot of misunderstandings, got a lot of misconceptions also. So we decided, hey, why don't we do an episode about CPF? CPF also agreed. And so today, right, we have with us a CPF officer to answer all our burning questions. Please welcome Tse Min to the show.
Hey, welcome. Educational episode, my favorite.
Did I get it right? Are you a CPF officer? What's your exact title?
I take charge of the customer relations group.
Ooh.
Basically oversee the customer service operations in the board. Yes.
So by right, you need to know everything about CPF because someone might ask you a question and then you just have to know the answer, right?
I need to know enough. People come over and ask me, Tse Min, what's this BRS, ERS, FRS? Or I have to explain in very layman terms on what it means. And more importantly, the implication it has in their lives.
I'm very glad that you brought it up, and especially about laymen because I think we need
the layman explanation of what is CPF and what does it do?
I don't even know what the middle word means.
Provision.
Provident. Provident. It's provident.
So
Central Provision Fund.
I think we have just proved why this episode is so important. But
The CPF logo got 3 key.
That's right.
What is that?
Good question.
What is this meaning?
No. Although people would love to associate that with the locking up of your CPF money, it represents the tripartite relationship between the employer, the employee and the government.
Okay.
Yes.
That makes
You all know not?
Yeah, but you caught me there.
For context, right, we asked our Telegram community, 12,000 strong at the moment, almost 13,000, and we asked them for questions and they had a lot. So one of them didn't want to be fully named, so they named themselves M. M asked, why is the CPF contribution rate as such? The 17 and the 20%. How did we arrive at this number?
So what happens in 1955, actually, we started out 5% for employer and 5% for employees.
Whoa,
Surprise, right?
Okay.
The only reason it was as such was because that was the only amount we could afford at that point in time.
Perfect.
Okay, so that was 1955. So since the 1960s, the Singapore economy took off, wages rose rapidly, and the CPF contribution rates for the employer and the employee also progressively increased.
True.
Yeah. So, but there were times in the CPF history when we have to do CPF contribution rate cuts. So the first time it happened was in 1986. That was Singapore's first recession since independence. So at that point, the employer rates were cut from 25 to 10%. Very drastic. Very drastic. But that helped to keep the industries competitive, retain jobs, and it really pivoted the Singapore economy to recovery. And of course, thereafter, the rates were progressively restored. So that was the first time.
But never back to 25% though.
No.
Wow.
Okay, so the second time it happened was in 1999 during the Asian financial crisis. The third time it happened was in 2003, right after the September 11th terrorist attacks. I mean, these were very unfortunate events, but it took us until 2015 where we landed on this current rate of 17% from employer and 20% from employees.
Yeah.
So we figured that this is about the right balance in terms of saving enough for retirement and also whatever we could afford, I mean, in these prevailing economic conditions.
How long have you been in CPF already?
So I'm what they call a lifer in
No
CPF board.
way, you've been there.
Lifer,
Wow.
yes. So I joined the board after I graduated from university. So I'm still with the board today. It has been over 20 years.
Whoa.
Yes, that's right.
Okay.
So I have done things in housing, employer business, insurance, retirement withdrawals, and customer service is my latest posting. Do you all know that we are actually celebrating our 70th anniversary this year?
So CPF is older than Singapore.
Yes, that's right.
Oh.
That's right.
Okay.
Surprise, right?
Yeah.
Yeah. We have been here for 70 years.
Was it frustrating for you working in CPF and saying, look, this is such a good instrument, right? And there was a time in which Singaporeans did not value that or did not appreciate it.
There were a lot of negative sentiments way back, say 2014, 2015, about, people were at Hong Lim Park doing demonstrations. They have cardboards that say, return my CPF. And they felt that CPF was sort of a means for the government to lock up members' monies. Those were challenging times for us. Last time we used to be located at 79 Robinson Road. We have a CPF building there. And then we heard stories like, let's say you want to take a taxi to work, right? They would deliberately tell the taxi driver, uncle, can you go a little in front and drop me there? And we'll walk back to the building because we don't want to get scolded by the taxi driver. So if you drop off at CPF, the next question is, are you from CPF board? And then after that, yes.
Oh my goodness.
It happened.
Why must it be locked?
First and foremost, when you talk about retirement savings, you have to ring fence it because it's for long-term needs. The other side of the equation is you don't know how long you are going to live. So that's the reason why we have all these policies in place to ensure that minimally you have enough to sustain your retirement years.
Right.
The CPF system functions on this concept that we want to our members' monies to grow in a very reliable and safe manner. It is important for CPF members to understand that while yes, there are benefits to compounding, to growing your monies, there are also certain conditions attached to it. First and foremost, if you do this CPF transfer or you do a cash top-up to your special or retirement account, it is irreversible, okay? Because I'm paying you a higher percentage, but in return, you need to ring-fence the monies for retirement purposes.
Depending on how that money is invested to get that returns, there needs to be some stability as to how much money is there. Because if it's reversible and everyone can just take out and put in, then it's so hard to put it into an instrument or a series of instruments to get that 4%.
But what is meaningful about the work?
So I have this intern one day sat in front of me. So we were talking about work. He was assigned some projects and stuff. So out of the blue, this intern just said, I find HPS very, very good. It's a very good scheme because I was a beneficiary of it. At that point, right, my heart really sank. Because for you to be a beneficiary means something unfortunate happened at home, in your family. So it turned out that the dad, he was, I think, second year university. The dad just passed on suddenly, But luckily, he was insured under HPS. The claim proceeds was used to pay off the outstanding housing loan. So they don't have to worry about servicing the loan and he could finish his tertiary education. When you get through the administration on a day-to-day basis, to us, it's very BAU, business as usual. You administer the scheme, talk to members, Sometimes you just take this kind of incidents, right, as a wake-up call that, actually, I'm doing very meaningful work here and I'm benefiting a lot of people out there. So it's just little incidents that makes you realize actually all the hard work, the blood, sweat and tears, it means something. And last but not least, something also that resonates with me at a very personal level, I like to push the boundaries. I like to question status quo. So the board gives me that opportunity to do that, to push, to streamline and ask questions like, why do we need to do this? Can we streamline it? Can we not even do it in the first place? So this constant drive to question the familiar and to innovate makes the whole career, I would say, very exciting and fulfilling.
I would love to dive in there a little bit because I think the perception that a lot of people have when it comes to the public service is that you don't get to question, you don't get to push the envelope. So do you have an example, like when you mentioned, like, do we have to do something in this way? Do you have an example of that?
Maybe CPF nomination. I mean, have you all done your CPF nomination?
I've been meaning to, but I've been delaying it for 2 years. Since I got married, I've been putting it off.
CPF nomination. That means essentially it's about nominating who gets your money if something unfortunate happens to you. Actually, way back, right? It is hard copy. You do your nomination. Who do you want to have your monies when you passed on? And you need 2 witnesses.
Yes.
So last time, I mean, we were looking at the stats. We were like, why is it that a certain percentage of Singaporeans are not making CPF nominations? And we realized that it can be for very trivial things like, I don't want to come to the service center. I don't want to make a trip to do the nomination because you need 2 witnesses. It can be as simple as that.
Yep.
And another reason which we found out is some people find it uncomfortable that the witnesses see the nomination details. That's right. Very, very simple reasons.
Yeah.
And what we did was we actually took a very bold move to digitalize the whole CPF nomination process. And we introduced remote witnessing. So that really helped to pivot the whole process. So now no more hard copy, everything is online.
So Chloe asks, what can a senior citizen do when they don't have tech knowledge, they're not tech savvy, they also not comfortable using computer and SingPass? Then how can they carry out services with CPF Board?
Okay, so at CPF Board, we are digital first, but not digital only. See, very important. Members, seniors who need support and assistance, they can always make an appointment to visit me at my CPF service centres.
Bishan, shout out.
Bishan, yes,
go.
Maxwell, Tampines,
got more.
Woodlands. We have 5. There's 5 located island-wide, strategically.
I thought it was like Novena, but like no.
No. Novena is the HQ. So other than that, the seniors can also visit the self-help lobbies at the service centres where I have digital ambassadors on site to support them. Yes,
As in human.
Yes.
Okay, you mentioned a few terms, and I think it might be a bit confusing for some as well because there's different retirement sums. So there's basic retirement sum, there's full retirement sum. Are you able to explain the differences?
Before I do so, maybe I give you a CPF 101 crash course.
Thank you.
Okay, Lisa wanted to ask you actually.
Yes.
I'm so
don't
lost.
worry,
Okay.
don't worry. It's
I'm here to learn.
okay for all of us who are
Okay.
below 55 years of age.
Yes.
We have 3 CPF accounts. 3 CPF accounts.
Okay.
Do you know which
Ordinary.
one's like?
I know OA, SA, and the
MA.
Now what do they stand for?
Yes.
Medical, retirement, and ordinary.
So for members who are below 55 years of age,
Yes.
you have 3 CPF accounts.
Say SA, then you say retirement.
Ordinary, correct. Ordinary account and then special account and MediSave account.
Yeah.
But the intent is correct. The intent is
intent,
correct.
the idea of it.
The idea of it is
Yeah.
correct. What happens is when you reach 55 years of age, another account called the retirement account will be created for you. And that's where you set aside the full retirement sum.
Means what? Oh, I know. Is it all the money go in there?
No.
Oh,
Only
okay,
the
sorry.
full retirement sum, the applicable full retirement sum for that year.
Okay.
This year is 2025, right?
Okay.
Okay.
You turn 55 this year.
Okay.
So the full retirement sum is 213K. So what we'll do is we use the special account balances to actually set aside the full retirement sum. If not enough, I'll take some of your ordinary account balance, set it aside in your retirement account.
Okay, understand.
So far so good?
So means y'all will tell us, okay, this is the full retirement sum.
That's
like
right.
it's a certain number.
Yeah.
Yes.
So y'all take it from SA first.
That's right.
And then
If
if
not
it
enough.
fulfills, okay.
Good job.
Yes, good
If
job.
not enough, take from OA.
Generally
to slowly
speaking,
give you along the way.
yes,
Then
that's
the
right.
rest, what happened?
Okay, so as I was saying, so the full retirement sum set aside in the retirement account.
Okay.
Yes.
And for members 55 and above, you also have 3 accounts,
Okay.
which is ordinary, retirement, and MediSave. So the special account is closed already.
yeah,
So
okay.
3 before 55, 3 55 and above.
Okay.
So no problem.
So far
so
so
no
good.
issue. So I will proceed to explain each of the CPF accounts in turn.
Okay.
Before I talk about the BRS, FRS, and ERS.
okay.
Ordinary account, generally most of us, if you buy a house, you will use it for housing purposes, right? You can also use it for investment, insurance, and education. So short-term needs. Special account, for all of us below 55, the special account is primarily for retirement purposes. So you cannot touch it. And then, of course, you have MediSave account, primarily for healthcare expenses. Then you move to FRS, the full retirement sum, in your retirement account, right? What happens is this amount of money will stay there, accumulate, compound, earn good interest until the time you reach 65 years of age. And that's where you can actually start receiving your monthly payouts.
At 65 only.
That's right. The earliest 65. What happens is we'll use the amount in your retirement account as premium to join CPF Life. What happens is CPF Life guarantees that you get a monthly payout.
Okay.
for life. It's a hedge against longevity risk. So the longer you live, the better it is for you. CPF Life is unique in that we commit that I will pay you for as long as you live.
Yeah, regardless of whether you
So
live
for example,
Yes.
if the amount that you put in plus its interest finish already and I'm still alive,
Still
the
continue.
money comes from that pool.
It's a commitment. There are 4 factors that affect how much you get in terms of monthly payouts. First and foremost, definitely it will be the choice of your life plans. Currently, we have 3. The standard, we have the basic, and we have the escalating. I'll give you an example. If you choose the escalating plan,
Okay.
when it comes to monthly payouts, initially the payouts are a little lower, but this escalating plan increase your monthly payout by 2% per year for life.
Okay.
So which means to say that it helps you effectively to maintain your lifestyle even as price of items increase.
Combats inflation essentially.
The second part is, of course, it depends on how much retirement balances you have to join CPF Life. The more you have, of course, the monthly payouts will be higher, correspondingly higher. Third one, I think this one we also mentioned briefly, when you start payouts. If you start at 65, technically, no problem, but you can defer. And for every year of deferment, you get up to 7%, that's right, of increase in monthly payouts.
Wild.
and for those 5 years, they will continue to put.
Yes, that's right.
So,
They'll
and then it will continue compounding.
Yes, that's right.
Ooh.
The monies will grow. The monies will grow and you get higher monthly payouts. The last factor is pertaining to life expectancy. So because CPF Life guarantees a payout for life, for as long as you live, right? Longer life expectancy technically will translate into lower payouts because the payout duration is now longer than average. And that's also the reason why males get higher payout as compared to females, all things being equal, because they have shorter average life expectancy.
We die faster, so we get more monthly.
Statistically.
Whoa.
Yes. No, but you all live longer, so you all will get more eventually. It's just that.
Maybe I don't want to live long.
But you don't know, is it? Yes, that's right.
I think
That's
fair.
right.
I think very fair. What's the trade-offs for standard and basic?
For standard plan, you get level payouts.
Okay.
So there's certainty. Some people prefer that, you see. So level payout for life.
Yeah.
As you age, right, or maybe the effects of inflation, you may need to adjust your lifestyle and buy less in the future. So this is the trade-off.
Yep.
But
Okay.
you get certainty. The thing about basic plan is actually your payouts gets progressively lesser as you get older.
Right.
Oh.
If you talk about the retirement lifestyle, you need to adjust it.
Also
Yes.
one like that,
Okay.
then one like that, then
Yeah,
one like
correct.
that.
But what if I don't have like anyone to pass it to? For example, like I would assume like for parents it's more beneficial, like because if they pass on, they can technically transfer this money to like their kids, right? Like this
Okay.
is like
Okay.
their
That's
That's a
kids.
great question. So if they made a CPF nomination to their kids and they die at say 75 after CPF Life has started paying out, what actually goes?
So what we'll do is we will definitely disperse whatever that is in your CPF accounts to the nominated beneficiaries. Specifically to CPF Life, let's say you join CPF Life at say age 70, okay, with a big sum of retirement balances. And unfortunately, this member passed on and say age 75. So what we will do is we will actually return the unused premium and commingle it with the rest of your CPF monies to be distributed to your beneficiaries.
Oh my goodness. Okay. So,
The
so
unused premium.
that's actually quite wild because you can't withdraw what you had in your full retirement sum. But if you were to unfortunately pass on, whatever was unused
Premium, that's right.
actually gets passed on to
Yeah,
your
that's why I say for parents
nominees.
it's like good.
It makes sense. Yeah.
Yeah.
Yeah, it makes sense, ma. But if I'm single and like I don't have anyone,
No, but you can still nominate somebody, ma.
but what if there's no one left?
No, it can be any. It can be Jean Paul.
It can be anyone.
You look so disappointed.
I have nephews. More important. So maybe certain jobs they do get CPF, but some jobs they don't. So what if by age 55, right, the amount in their CPF is like so low, right? that they cannot hit any whatever, then what happens then?
What happens to them, is
Yeah.
it? Okay, so what happens is, remember our three concepts, right? The BRS, FRS, and ERS. So what happens is the BRS, basic retirement sum, is actually meant to provide monthly payouts for basic expenses, excluding rental. Okay?
Oh, okay.
So very basic. Okay.
Makan. Yeah.
FRS is like
Retirement
what we
sum.
have discussed earlier, the default amount you set aside in your retirement account.
Yes.
And we have another concept called enhanced retirement scheme, which is actually 2 times the current full retirement sum.
Okay.
So it's double the FRS.
Okay.
It's also the max, right?
Yes, that's right. So what happens is this ERS actually sets the maximum amount that you can top up to your retirement account if you are 55 and above. It increases every year so as to provide a little bit of buffer for you to top up if you want to maximize your monthly payouts.
And my understanding also is that it doesn't only have to be from you, right? Like you can make top-ups for your parents also.
Yes, yes. You've brought up a very good point, and I think this is also one of the main reasons why people do so. So let's say for me, I'm below 55 years of age. I can technically, if I want to top up, I can top up to my own special account, okay? But at the same time, and the good thing is, if I can top up, I get tax relief. $8,000.
Yo.
It's a lot.
Huge.
And in addition, if you top up to your loved one's CPF accounts, you get another $8,000 of tax relief.
Hey, that's huge.
But
Yes.
how much
Yes.
should I top up to like hit the 8,000 tax relief? Like, is it $1?
8,000.
Or like,
So you put 8,000, but you get 8,000 tax
yes,
relief.
correct.
But if you're already earning above a certain threshold, like 8,000 or 16,000 tax relief is a lot.
It's a lot. It's a lot. Yeah. So in your example, these are people who have not
Yeah.
set aside the FRS.
Yeah.
So when it comes to lump sum payment, lump sum withdrawal, you can still withdraw up to 5,000 from your ordinary account. And let's say when you're ready to start your monthly payouts, you still get monthly payouts. The question is just how much.
So say for example, I only have 30,000 in all of my CPF put together, like at least the OA and the SA. So then at 55, I can withdraw up to 5,000. The 25,000 remains in there. And then when I'm 65, I just get the payouts based on how much that is.
That's right.
Right,
That's right.
right.
That's
what
right.
if I
That's
have
right.
less than 5,000?
Assuming you have.
From a lot of other problems.
Yeah, you really need to be
So that would be a
concern.
everyone in general will get like $5,000 that you can take.
Minimally, if you have not set aside the FRS, you can withdraw up to 5,000, assuming there is 5,000 in your ordinary account.
Another question from our community member, Ko Teo Pin. He truly like docs himself. If I can meet the full retirement sum at age 55, can I withdraw any and all my balances of OA FRS? I believe you answered this, but
Yes.
just to answer him specifically to this, the answer is yes, right?
Yes, that's right.
Okay, so basically once you set aside the FRS already, everything else in your OA, you can, but recommended to keep lah, right? Money on demand.
When you hit 55, the FRS, right, the amount will be
right.
taken from the SA first. So if let's say the amount is taken and there's still extra in the SA, what happens to that? It goes
to the OA.
Okay.
So then, and then you can
So
withdraw
then you
everything.
Only withdraw when you need it.
Yeah.
But it's
If-
default that it goes to the OA.
That's right. That's
So you
right.
cannot
Because your
choose for
special
it to-
account will be closed already by then.
Right. So you cannot choose for your retirement account to be even higher.
What happens is your example is, let's say you have a lot of balances in your special account. So much so that even after setting aside the FRS, you still have excess. It goes to your ordinary account. But of course, this happens to some members. It is a fact. There are some members who are in this situation. So the question posed to them will be, so what do you want to do with your OA funds? You can do CPF transfer
can.
from OA to SA up to the ERS.
Enhance.
Yes,
Double.
that's
okay,
right.
got it,
That's
got it.
right.
Double.
And the thing is, ERS increases every year. So there are some members whom we encounter, they will wait for the ERS to go up and they will pump in monies to maximize whatever they have in their RA.
And the returns on that is
4%.
Okay.
But is that account like withdraw anytime can or locked in
No,
also?
whatever is in your retirement account can only be streamed out via monthly payouts.
Oh.
When you're 65. I think we touched on the OA and SA earlier. Like, I think a lot of people are curious, like, how did those rates come about? The interest rates, the 2.5 and the 4%.
Yes. So the ordinary account is actually pegged to the 3-month average of the major local banks, fixed D and savings rate. With a floor of 2.5%. So if the 3-month average is say 1%.
Okay.
But because I have a floor of 2.5, your CPF ordinary account savings still earns 2.5%. As opposed to the ordinary account, you have the retirement account, you have the special account, and you also have the MediSave account. It is actually pegged to the 12-month average yield of the Singapore government securities plus 1%, with a floor of 4%. So this higher interest rates actually reflects a more long-term and stable benchmark. You have to set a floor because you have to, in a way, you want to guarantee to a certain extent the amount of monies that members can get to be able to retire comfortably. So that's the reason why there is a floor. Otherwise, you'll be subject to a lot of fluctuations. And that is not the intent of what CPF is about.
So if you transfer from your OA to your SA, you can't move it back.
That's right. Daniel has mentioned is this CPF transfer of your OA to SA. So, I mean, the benefits, I'm quite sure you realize, definitely the rate in which you grow your funds much faster. You will definitely get a higher monthly payout.
So we understand that calculation already, but how is it divided between the OA, SA and MA?
I think you're referring to the allocation?
Yes.
The CPF
allocation.
allocation.
Yes.
So the CPF allocation is actually designed to meet the different needs across your different life stages. For example, when you're younger, your OA usage for housing is a big priority. So that's the reason why a larger proportion of the CPF contributions go to your ordinary account. For example, if you are 35 and below, about 62% goes to the OA.
Okay.
But as you age, medical needs become more pertinent, and that's when a larger proportion goes to your MediSave and retirement account and special account. That's right.
So that 62% is fixed by CPF side.
Yes.
Like it's not something that we the contributor or us can.
No.
I
It's
see.
fixed.
Is there a concern from CPF that in the recent years, a lot of people are taking gig economy jobs?
That's right.
And that requires voluntary CPF contributions. Is there a concern that a lot of people might not be able to meet BRS or FRS?
If you realize CPF over the past few years, we have been ramping up in terms of creating awareness on what CPF entails, how it affects your retirement and so forth. I think each individual have to decide what kind of lifestyle they want at the end of the day, retirement lifestyle.
So you can't be a
what
baller.
kind of desired monthly payouts you want to get when you retire. So CPF is never about one size fits all.
Yeah.
At the end of it, it depends on your circumstances. This emergence of gig economy, doing freelance, or even to the point of having micro retirements is a growing trend. It's not something we should stop, but rather, question is, can CPF stay relevant in this kind of environment? It's about how do we help our CPF members to continue to have steady retirement going forward? How do we reinvent ourselves? But I would say that is a question for the longer term.
So what is micro retirement?
Some people out there, what they do is they work, then they stop. They take a break, maybe a couple of years. Then after that, they work again, they take a break.
I micro retired 2 times.
Yeah.
1 year break.
I think you
consider
took a break from work.
Yeah lah,
You
that
took
one
a
not-
break from. It's a pattern. It's like you work for a while, then you stop for a while. You work for
Like 5 years, 5 years, 5 years
yeah,
alternating.
that's a trend.
And that's a trend now.
It's an emerging trend.
Yeah,
It's an
because
emerging
the
trend.
principle is that like you work so hard, by the time you're 65 and you retire, if you choose to retire at 65, you don't have the same energy to
Right.
enjoy the
That's true, that's
wealth
true.
that you've accumulated. So you
Yeah.
might as well do it in bursts across your...
It depends on individuals.
Sounds interesting.
Yes.
Immediately,
Yes,
Michael
yes,
Diamond spoke to you.
yes.
Screaming.
But I think at the end of it, it's about being meaningfully and gainfully engaged. So let's say for this year, if you set aside the BRS, which is half of the FRS of 213. You do
Okay.
the math. So 106,500. Yes, if I'm not wrong. I'm joking. Sorry. So if you set aside the BRS at
Okay.
55 this year,
Okay.
and you start payouts at 10 years later at 65,
Yeah.
you are getting roughly about $930 per month.
Okay.
Okay, so this is BRS. If you have set aside the FRS,
Right.
okay,
Okay.
full FRS,
Yeah.
you are getting $1,730.
Okay.
Okay. Okay.
Okay.
Now we move on to the highest tier, ERS.
ERS.
If you have set aside the ERS today at age of 55 in 2025, 10 years later, you get $3,330.
Boom. That's a monthly salary. That's enough to just chill,
Right.
relax, enjoy retirement.
Right.
And as it stands now, we do have this retirement payout planner. That's right. This is a very useful tool. I tried it. I found it very useful. First and foremost, you will set your goal in terms of the desired monthly payouts you want to receive when you retire. So this is the first step. Second, they will actually project the monthly payouts based on your CPF balances and your input parameters like your salary information.
Okay.
And then the last step is, how do you plan to work towards your desired monthly payout?
Okay,
By
okay.
simulating actions like CPF transfer from OA to SA, or you do cash top up, etc., etc.
That's not bad. They already have a plan like what to do.
Yes.
No, but it's so clever because they started from the point of how much do you want to
Yes,
get every month. So
that's
say I want
right.
Words,
Yeah,
words,
yeah,
words,
yeah.
It's a very systematic way of planning, and the good part about this is you can save all the returns and you can come back and review when your income and financial circumstances change. So I find it useful personally.
Where's this tool?
It's on the CPF website.
Oh, okay.
Under plan with CPF. So you can go in and take a look. Besides that, we also have this home purchase planner when couples, right, they want to get their first BTO.
Yes.
Very excited. It's a milestone in their life, but I would say that it's a very big financial commitment.
Yeah.
It is it's a very big financial
What's the meme sound?
commitment. So it is very important
Yeah.
for the couple in question to have very frank conversations about this early on. This is where this home purchase planner helps. It effectively helps the couple make informed decisions on two fronts. It helps you calculate the estimated home purchase budget with different loan options. So this is one. Second, and more importantly, it quantifies the impact this OA usage for the home has on your desired payout goals.
Okay, that's quite key.
I mean, it links two and two together. It helps you plan wisely while keeping the future retirement needs in mind.
Okay, I got a question. So
Yes.
you know couples that have BTO together,
That's
but
right.
then they already use their CPF to pay, right? But then they break up. Then what happens to the CPF money? I heard it's forfeited or something.
Let's say you and your wife, okay, you have the BTO, right? And then let's say a few years later, you want to uproot and move to another part of Singapore.
Sounds good.
You want to sell this BTO.
Yes.
So what happens to the CPF that you have used for this BTO?
What does happen? Yeah, okay.
So what happens is you take the sale proceeds, and then of course I think assume that you are taking a HDB loan.
Yes.
So the sale proceeds will first be used to pay off the outstanding housing loan. Then after that, the remaining be used to refund the CPF principal use plus accrued interest.
Accrued interest as well.
Yes, of course. We want to reinstate your CPF as though you have not taken out the money to protect you. As long as the person is no longer a legal owner of the property,
Right.
CPF has to be returned.
So use cash to pay back into your CPF. But what if it's before they move in? So like, because it's a BTO for married couple and then they divorce 2 years before they collect the key. But the down payment has all been paid for already.
Because these are more complicated cases, the couple in question will write to HDB, get an understanding on what they need to do with the flat.
Okay.
So it depends on what happens to the flat at the end of the day.
Someone asked when, because I think when is important, more important than the why actually, but when and why should I move funds from my OA to SA?
Short answer is as soon as possible.
Wow.
Really?
But not to wipe it out, lah, right?
No. Okay. Maybe I explain a little bit. Oh, I realized short answer cannot suffice.
Yeah. It's like long answer.
Yeah. I need to explain a little bit. Okay, I mean, start from basics, right? OA to SA, you earn a higher interest of 4% per annum. So this is very good. I mean, it compounds, it grows very fast. Definitely, the earlier you do so, the longer your savings have time to compound and grow. But implications. This CPF transfer is irreversible. It's irreversible. And to top it off, if you're using OA funds, like I mentioned earlier, a lot of us are using OA for housing purposes. So you have to consider, are you using your OA today for housing? Do you need it for other short-term needs? So you have to make this kind of considered decisions before you proceed to make the transaction.
Yeah, it's quite a difficult one. I remember before getting my BTO, then there was like this perception like, oh, you just calculate whatever you need, right? Then for the down payment, and then everything go into the SA. Then I calculate like, but then what if I need to pay for like the monthlies? Then the monthlies is also like, what if I lose my job? Then like, wow, okay, calculate. In the end, I didn't do anything. I just left it in my OA.
Yeah. You brought up a very, very good point. Let's say people, right, when they want to use OA for housing purchases, let's say for BTO, for HDB flat. And then sometimes we do get asked this kind of questions. So how we will explain this to customers is, first and foremost, what type of loan are you taking? There is a difference. Let's say for you, I assume it's a HDB loan.
HDB loan, fixed.
If you're taking an HDB loan, the down payment is 25% of the purchase price. And that down payment can be fully paid using OA or part OA, part cash.
Yes.
No problem. If you're taking a bank loan, similarly, down payment also 25%, but the first 5% has to be fully paid in cash. And then the remaining 20% can be financed using OA or OA plus cash. You have to consider your cash flow, your financial circumstances, your future goals to go about doing these arrangements. But I think we also need to bear in mind that CPF funds collectively are for retirement purposes. So whatever you have used up in your OA for your house, actually it's like if you leave it untouched, you will earn risk-free interest, and then it compounds and it grows. Right. So that is one implication of the usage. And last but not least, what we recommend is good to leave a buffer in your ordinary account. For example, leave 20,000 there in case you need to touch it if unforeseen circumstances happen. Yeah, always good to have contingency plans.
Something else that actually was very pertinent to an earlier discussion and it went viral and we invited them on was Casey and Jill. Basically what happened was that their husband and wife, it was during COVID, so business wasn't particularly great. But when Jill went into delivery or during the whole pregnancy, her husband Casey didn't use his MediSave for any of the hospital bills. So the question is, should husbands use their MediSave for baby hospital bills?
Husbands can use MediSave for delivery related expenses. Husbands can use their MediSave under the MediSave maternity package to pay for, say, pre-delivery charges, delivery charges, and also hospital stays for the mom and the baby.
Yes.
So it can be done. You can also use the MediSave for procedures like IVF.
I bet you didn't know that, right?
Yes.
Is there a cap to how much you can withdraw for IVF?
As with MediSave usage, you know the withdrawal caps are always in place because it's meant to help you stretch the monies for as long as possible. So at the end of it, if the husband has enough MediSave, the couple agrees, he can use it to pay for the related charges.
Have there been situations where people go like, I get the cap, but I need it now. Like I have a procedure and I can't afford it.
And they always say, but it's my money. Right?
You sound like
I cannot use.
You really sound like an uncle.
We'll try to explain why these withdrawal caps are in place. 2 reasons. First and foremost, I mean, we are all living longer. And as you age, medical needs become a lot more pertinent, right? And that's why it is important or imperative that you stretch the monies for as long as possible. So this is one reason. The second reason is also about encouraging prudent spending. So having a cap in place actually creates awareness about the medical expenses incurred. And at the end of it, members, because of the caps, they make informed decisions about the medical treatments.
So I'm looking at my CPF mobile app,
Yes.
and then they say
Your
like,
transaction history.
yeah, my transaction history, and they say something like they minus $300 for a integrated shield plan. Why?
Why? Okay, so what happens is today, all of us are covered by MediShield Life. Very basic. Okay, insurance scheme. Insurance scheme, correct?
Yes.
To take care of your basic healthcare needs. But if you want higher level of protection or be able to visit, let's say, private hospitals.
Yep.
So this is where the integrated shield plan comes in. It gives you an additional layer of insurance in addition to whatever you have at the base layer, which is MediShield Life. So this insurance, the premiums are incurred on a yearly basis. And I think that's the reason why you have this $300 deduction from your MediSave account.
And this is usually underwritten by a vendor of your choice, right? You can work
That's
with,
right.
like,
That's right. There
any of
are
the
integration
providers.
shield plans providers out there. So you choose the plans based on your needs and inclination. Actually, if you want, you can go to the CPF website and access the health insurance planner. Very, very useful tool because it helps you compare the different health insurance plans and you can decide based on your preferences and inclinations. More importantly, it also gives you an estimation on how much premium you're paying at the end of the day.
Okay. And by preferences and inclinations, you mean like what we discussed, like the wards that you want.
That's
and stuff
right.
like that?
That's
Okay,
right.
okay,
Okay.
okay.
Yes, the kind of coverage you want.
Yes.
In addition to the MediShield Life.
Oh, okay. And can you actually use your MediSave for your in-laws hospital bill? You can't, right?
No, you can't. You can use it for your spouse, your children, your siblings, parents, and grandparents.
Okay.
But you can use your OA to top up your in-laws MediSave account.
Subject to caps, but still okay.
that's right, that's
So someone asked, should I opt for lump sum withdrawal or monthly payouts? What are the pros and cons?
These are just two means to support your retirement. Right? If you have an immediate need, no problem, just withdraw the monies. But don't withdraw for the sake of withdrawing. Because as it stands now, I don't think the savings account are paying this kind of interest rates.
Yeah.
This kind of return on your deposits. So if you don't need it, just leave it there. And the other aspect of it is if you want to use this to augment your monthly payouts, you can do so via CPF transfers of OA to SA or RA.
Yeah, I think the thing is that a lot of people think that they have something that no one else have. Like they have this magic touch when it comes to the stock market, right? So everyone feels like, hey, I withdraw, I can earn more than the 4%, I can earn more than the 6%, I can do it myself. And then more often than not, I believe there was like a study that went out that more often than not, no, you really can't. So actually just leave it in there.
There's no free lunch in this world. If you want higher returns, it comes with higher risk.
Yeah.
It's a fact.
But then, like you just mentioned, like a lot of people maybe don't like CPF because they don't understand it. And once they do, actually, they come to like it, right?
They can understand the benefits it offers.
Should it then be a fixed part of our curriculum then? Because like a lot of people only come to this like financial awareness almost like 25 to 30. And then you realize, wait a minute, I've been thinking about this all wrong. I should have started when I was 20, but I had no idea.
But it's okay. That's what the Daily Ketchup is for, right? Yes. A lot of misconceptions about CPF stem from the fact that they don't understand. They don't understand the benefits. That leads me to another point about starting young. Today, we are very, very aggressive when it comes to creating awareness, even for the young Singaporeans. Personally, I believe that starting young Singaporeans on the CPF journey is not merely about creating awareness. It's about giving them a head start in life. So when we do our regular school talks, we also supplement it. I mean, other than the information, we supplement it with digital games, interactive games. We do.
Okay.
Like catching insomnia, the case of the vanishing fortune. We have that.
Catching
Very
insomnia?
Yes, it's a game. It's a very interesting game. And there's another one, a detective game called The Case of the Vanishing Fortune. So it keeps it very engaging, very interactive. And the students are able to relate to this practical aspects of the CPF information, and also the early advantages of financial planning that will help them with important decisions when they get into adulthood. Of course, when it comes to young Singaporeans, they can also understand a lot more about CPF, know about us via our social media channels like TikTok, Instagram, YouTube videos, to understand bite-sized information and also financial planning tips.
All right, guys, thanks so much for watching. That's all the time we have today. Also, thank you so much to CPF Board for partnering us in this episode. And also, thank you, Tse Min, for joining us and answering all our questions, enlightening us. I think we've learned a lot. Thank you so much. Like, share, subscribe. We'll see you in the next one. Bye-bye.